Hey, it's Adam Anderson, owner of WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for listening.
We got a lot on the slate today to talk about. So, Blake, let's get right into it. Let's talk about the month of January.
Yeah, so January, the S&P 500 was up around 1.5%. And one of the things I like about that is historically, when January has been up in the market, the year tends to be up. They call it the January Barometer. Maybe a little uh, not not super guaranteed, but any good sign is a good thing. Mostly right now, what we're looking forward is a bunch of earnings coming out in the next couple weeks. About 25% of listed companies will be in the next couple weeks for their earnings, and then also the new labor reports will give us some more insight into the economy. So hopefully, all those things continue to be strong. We should have a strong start to the year.
Yeah, so statistics, I think it's 72, 78% or something like that of the time when we have a good January, the year ends up. So let's hope that holds true for this year. The biggest news of last week, we did get a potential new federal chairman, Kevin Warsh, and he's very hawkish, and he wants to rein in spending and or maybe lower interest rates. He's a student of Milton Friedman, for those of you that follow economics, supply side economics, capitalism person. So something that's interesting there. Anything you want to add to that, Blake?
No, I think it is a strong pick. We'll see. Hopefully, he could get the Federal Reserve out of some of the politics it's been mired in recently, and they could go back to doing their job nice and quietly. It's nice when they're not in the news.
So the biggest mover of the week was silver and gold, and silver had its worst day since 1980. Fell over 30%, and actually it's down about 4.5% today. This just really shows. I mean, a lot of people think silver, gold are kind of safe havens, and I always tell people they could be as volatile as a stock, and this proves my point. So that's why I never want to be overexposed. Having some exposure to precious metals, I think, is good, but in the just to be aware, those people that are owning it as if it's a fixed, safe asset, it is very volatile. Anything you want to add to this, Blake?
Yeah, and we talked about this a few weeks ago, a month or so ago, about the run gold and silver we're having. Gold also had a drop off, not quite as steep as silver's. And we talked about how a lot of the demand for this was in the institutional buying from especially central banks around the world. And so all it takes for these, crazy bull markets in gold and silver to collapse is a change in these banks' policies where they stop buying. And I think that's what we saw was that these huge buyers decided to stop buying. And then there was a lot of profit taking going on. People who have been, they've participated in this huge run up in gold and silver. They have these large unrealized gains. They try and realize it, and all of a sudden the banks aren't buying. And we see these rapid, highly volatile drops. I don't know that we'll see it continue too much further. We have seen a lot of buying volume pick back up end of Friday and today. But it's just something to be careful of when looking into these.
It does seem to be that 69, 70 range on the silver seems to be a support level. We'll see if it holds that, if it starts to move up. After the 2008, 1980 crash on silver, it took like 10 years to recover its value. But in 2011, we also had a similar crash, not to this magnitude, but it was able to recover in a few weeks. So we'll see what happens with this. There's still industrial demand for silver. Uh, it's if you were thinking about buying it a week or two ago, now's the time maybe to buy it. If you really want that in your portfolio, it would be time to start thinking about that. Um, I did have some physical silver, and when it was over 100, I called up a local silver dealer, and I said, "Hey, I'd like to sell this," and they said they are not buying at this point. So, but there is some other. I have conspiracy theories about market manipulation involved in this, and Blake doesn't seem to feel the same way, but A lot of these Chicago Mercantile Exchange raised their margin rates, they're kind of a technical stuff. But because of that, people were forced to sell, forcing a flush of the market and the exuberance out of it. So very volatile. I have two companies that I am watching right now, and one is Abbott Laboratories, and they just announced it back in November, the purchase of Exact Sciences, which you may recognize as Cologuard. So they are really poised in their mission to be really leaders in cancer diagnostics and screening. So it has come down a lot. It's a traditional company, lots of product out there, kind of a Johnson Johnson. They got all kinds of products, but they really are working towards that cancer diagnostic screening. Uh, um, and right now, it may be a little early. I got some alerts in here, and it may be a long term. It's going to take maybe later in the year before this deal even closes, maybe even next year. So it may be early. So we are watching this. But when we're talking about companies that are mired down in mergers, there's another real popular company that has the same problem, and that is Netflix. And Netflix has just been, ever since the Warner Brothers Discovery merger was announced, also back in November, they've got later in this year that maybe could solve that. It has dropped almost 37.5%+ in that period of time. And it does seem like here's a support. So, this may be, if I believe this will go through, there's still a lot of regulatory things they have to hurdle through. But once they do have Warner Brothers under their umbrella, it is going to turn Netflix into a powerhouse, and which they already are. So it was one of the best performing stocks over the last 10 years. I think it was the best performer, if I'm not mistaken, on the S&P. So it might be an opportunity to start adding to positions like this over the long haul. Let me just emphasize that long haul. I just want to back up on our overall strategy here at WealthGuard Advisors. We have broad diversified positions to give us exposure to multiple things, and that's what you have. What defends your positions is having diversification. And then with a small amount of money, we pepper your portfolios with individual companies that we feel will outperform the markets or give you more stability than the market. And that's kind of our overall way we allocate for people, that we want to have that concentration for growth, but we also want to have diversification for stability. So when people talk about diversification, they're usually internationals, which have done great this year. Emerging markets are leading the market. Small, mid-sized, large, value growth, those types of things. But I'm also talking about diversification of strategies, having some focused areas and having some diversified areas. So a little bit about us. Blake, you want to end up?
Yeah, if you're interested in learning more about us, WealthGuard Advisors is a registered investment advisory firm. And as such, we have a fiduciary responsibility to our clients. We're obligated to act in their best interests. We specialize in personalized asset management and financial planning designed around your unique goals and situation. We work on a straightforward fee-only basis. No setup fee, no closing fees, just transparent pricing for the services we provide. So if you'd like to learn more and are ready to take the next step towards a confident retirement, we'd love the opportunity to sit down and talk with you. Thanks so much for watching, and we'll see you next time.
Smash that like button and read our disclosures. Give us a call. We love you. We'll talk to you later. Bye.